I think this is really cool. I did go over it in the recent video. I was talking about this orange uptrend that we consolidated below it. And I said in the video, don't be surprised if we do pull back to that line. What do we do on Friday? Dropped almost 6% on the day, retesting that uptrend. So maybe we find some support there. Maybe this continues higher. And so now I will switch over to some GameStop calls. This is the $50 call for GameStop expiring June 20th. So, I like that date. And what we can see with this is the underlying in green. The stock price has been going up, but we've seen a little bit of a cool off. And we've also seen the average premium increasing, a little bit of a cool off. We see volume here. I don't know why. That's because this should not be the date. And so we can see that the open interest has been increasing, although we did see a decrease in some of that open interest around the spike here, but it, more or less is just kind of flat. So if we look at just the numbers here, open interest. So yeah, more or less it's been flat. There's actually been an increase. This 30 and that 29, they kind of balance. We got an increase of about 22 there. So, not looking so bad. But, maybe we're starting to see a cool off volume. Also, the total premium here, I'm jumping around here too much. A total premium over 120,000. So, that's 12 degen manatees YOLOing on the seagrass. But, maybe, I don't know how big herds of manatees get. So maybe that's getting into some bigger money there rather than bigger herds. And seeing a pullback in the total premium. And, just thinking about this, the thing that actually stands out, the ivy and that green there, it's above 100%. So this, while I think that GameStop could be going up to 50, definitely before June 20th, I think that the IV could cool off a little bit. And also for me, for contracts, I don't really like to get into, the $200 per contract. So it's like $2. And so here, the low for the contracts is around 576. So this is one I would want to wait for it to kind of cool off a little bit before getting into a position. And that's why, I have shares just because the contracts are so expensive. And if we do scroll down here, when, IV was lowest at 109, the premium here was not that bad. And so if it did come down to like 300, maybe I'd consider getting a contract. But for me personally, if it did come down to $3, I would not be able to get like multiple contracts because it's just too expensive for me. But, from that, when IV was low, or over here, when it was low, more than a 2x. So pretty nice there. And then I'll just look over at the data for this one, $50 call expiring June 20th. We can see that, as the average fill is going up, that premium's going up in yellow there. We do have more volume. So it would be nice to see it more volume, buying, as it dips, pushing that higher. And so, I think that we could see a pullback, and just looking at like the premium chart, just thinking about this kind of technically, if we, where the cursor is, that is right around, the peak over here. That average fill was like 570. So maybe we see a pullback to around 570. And if we do consider that, we do have, the low on Friday of 576. So that kind of makes sense. If I had more on the side, I would consider getting one of these at, 570. But I'm just going to chill. I'm just going to watch, see what happens. But yeah, thinking about the $50 strike, why would I be thinking it'd go up to 50? And it's because we got this gap up here. And also, with us getting above the high here from, let's see, that was July 17th. That was a high of right around $30 of $29.79. With us being, below that now, we did hit higher highs, and we are, retesting this as support. And so I don't really see that there's too much in the way from current price up to $50 to fill that gap at 48.75, and then it really could start to pick up, especially if Roaring Kitty posts some tweets, updates his YOLO, whatever. I think that we could really start to see some momentum, especially with, it looks like earnings are coming up on December 10th, so not this coming week but the week after. So things could really start to get a little bit more spicy with GameStop. But before I skip on to the next one, I do have one more GameStop contract. This is the $80 call that expires June 20th. And so this is probably going to be a little bit more in my price range. I'll go over why $80 stands out to me in just a second. But there's really not that much traded on this, as we do have gaps in the average fills. The volume over here, maximum 350 contracts, which represents a premium of 140,000. So it's not nothing. We do have that IV being, right around 140. So it is pretty elevated there. But we do also see with this spike in volume that the open interest has gone up. So this could be one that is pretty exciting to swing. And so thinking about this, like the other one that I was just looking at, the $50 strike, that one had a low of, on Friday of 576. And so the low for this contract, the $80 call, that's a low of 380. So much more reasonable price to be picking up some contracts. And so let's look over at the chart first so I can just show why, I think 80. And so the reason, I think I actually have to switch over to the 4-hour time frame so we get that pre-market stuff on there. And so when we had that big move up in May, the pre-market high was actually $80.70. And so that's why 80 makes sense to me. And then maybe we go beyond that, go up to 100, get into the triple digits. I could see that happening. So 80 seems pretty reasonable to me. And so I could definitely see that. But, I like to look at this on the daily. And so I'm just going to keep that over here. So when we're looking at the other charts, and just looking at this, is there anything else I need to say about this? No, I might want to put something in yellow here for me to consider buying. But first, let's look at the data here. $80 call, June 20th. We see this big spike in volume. Candle volume, 361. So again, not too huge, not too crazy. Looks like the majority was on the bid side. However, it's not always, bid doesn't necessarily mean sell. The way we will see that is looking at the data here that I compile into the spreadsheets. If we see that open interest increasing, and following that day, let's see, that was the 25th. If I scroll down here, just so looking at, the data here, the 25th to the 26th, when we had that spike in volume, majority of it was on the bid side. If you see in the top, left of that box there, the bid was 278 contracts. The ask was 73. That would make me think majority is being sold. But then if we look at the open interest data down here, we can see that between the 25th and the 26th, open interest went up by 336 contracts. So, that was majority buying. So that's actually looking really good. And then let's see, where could this be pulling back to? This, to be honest, I want to get one at 380, but I don't have that amount on the side right now or anything. And so, we got 355 here. Maybe it could come down to 350. And so maybe that I don't have enough on the side right now for that, to be honest, to be completely straight with you guys. But it's something that, I want to be paying attention to. When it's green, it means I've got the order placed. When it's yellow, it means I need to seriously consider it. Because I think this is one that could go from, an 80% swing in one contract like that, which is, following my table. That's a really good swing. So, hundreds of dollars, not just $100. So that's one that, I am interested in for myself to consider. I don't have an order placed yet. But yeah, let's, kind of see the IV die down a little bit. But with this expiring in June, I think that the moves are going to continue to go higher for GameStop. So overall, I'm bullish. I'm excited.